Hey there, folks. Are you team stock or team real estate when it comes to building wealth? So stick around as I delve into this age-old debate of stocks versus real estate. So in today's video, it has two parts. The first part, I'm going to walk you through what I think investing in stock market or real estate, the advantages and the disadvantages, and also use some data to make some comparisons, particularly using examples from Canada and the United States. Now, the other part, I'm going to upload another video where I did a real life example where I take an example of buying a house that is actually currently in the market going for 600,000 in Abbotsford, Canada, and do an analysis comparing a scenario where someone could possibly buy that house for 600,000, and then in that case also another person could be investing in the stock market and see what the numbers could be in terms of the next 5 years. But I clearly state the assumptions, which over time those comparisons or assumptions might change depending on whether policy changes, like the interest rates from the Bank of Canada or even the US when it comes to investing in the stock market. Now, one of the biggest challenges investors face when deciding to buy real estate or stocks is that when it comes to real estate, usually there's the down payment. Usually it's a big chunk. In Canada, if you want to buy a house, usually it comes to the fact that you can possibly have 20% down payment so that you can lower the insurance. Let's say the house goes for 600,000, so that's 120,000 down payment. But some people can go 5-10%, but also there are other programs that comes in to say if you're a first home buyer, there's a federal program where the government can have some part of the equity, but also then put in the money so that you can have, let's say, the 20% so that you have lower insurance cost. But another thing that I've seen, a lot of people, they then don't factor in maintenance cost and other associated costs of owning a house in addition to the down payment. So what I do is I do that analysis in that example, but in Canada, most people, they consider their primary home as another source of retirement income. So it is very, very important. In my case, I like to run the numbers and see the advantages. But the advantages that obviously come into mind is that I consider the risk, the potential return in that specific sector. In Canada, the real estate has been performing quite well. Of course, there are some years it goes up and it goes down. That is something to look forward for when I'm buying a house. But I also consider the market volatilities. So let's break down the drawbacks of either investing in stocks and also real estate. But now, starting with the house, I think of property appreciation, right? If I buy a house in 5 years, probably it might have appreciated, but at the end of the day, it's important to factor in other associated costs. Now, there are also qualitative benefits of people just saying, I want to stay in this specific location. It is associated with some certain kind of prestige, right? Or maybe just it's an environment where your family might feel comfortable being in that environment. So that's something some people consider. Now, they could be also rental income. If some people maybe can rent out a certain portion of their house, let's say the basement, or maybe to just have a way of making extra income from the house. And what I've seen when it comes to buying a house, for me, I like to look at a situation where I'm not house poor. In other words, I have all my money locked up in the investment of that house, such that if I lose a job or something, then I'm in a difficult situation. I can't even raise money to maintain the house. So some people end up going to the bank and then getting a line of credit, which they can possibly secure on the house, and that's a bit stressful. So one thing that I do, I like to have at least 6 to 12 months worth of living expenses. That includes the cost of paying out the mortgage, right? So that at least I can have 6 months to figure things out if something unexpected happens. So that's something that I've learned over time. Now, when it comes to investing in the stock market, historically, for me, I like to invest most of my money in the S&P 500 index. So I do that through exchange-traded funds, such as SPY, and there are quite a number of them. This is not investment advice, by the way. But at the end of the day now, when it now comes to comparison, I like to normalize the data. So there are indices, one that tracks the S&P 500, that is the top 500 companies in the US. So that can kind of give me an indication of how the stock market is performed. Overall, it has retained about 10% over the past couple of years, but of course there are some years it goes up and down. Now on the real estate, there are also some indices, in other words, the benchmark that tracks those companies that are publicly listed and that are invested in those real estate sectors, whether commercial buildings or also even houses. They can be both in Canada and the US. So, but in my comparison in the tutorial that I will post, I did a comparison of buying a house in Canada, comparing it with the US S&P 500 index, which has been one of the best investment securities in terms of the returns historically, returning about 10% annually, like I said. Now, so in terms of now the comparison, just using the data, the Federal Reserve Bank of St. Louis actually has the data that compares the real estate index and the S&P 500 index from 1980 to 2023 September. And over that time, real estate returned 8.6% per year, whilst S&P 500 during that time, 1980 to 2023 September, it returned 12%, excluding dividends. If you add dividends, that would have been 14% return annualized. So it's very clear in that case that investing in the stock market, particularly the S&P 500 index, would have yielded much better returns. But again, the past does not guarantee the future. Things can be different depending on maybe how interest rates or the macroeconomic environment or geopolitics. Nobody really knows except those people who make decisions. But I like to look at the past to kind of make my decisions in a way that I also consider what has happened in the past and also the future economic outlook. And that's more like, guessing in a way or modeling based on the data that is available or expectations into the future. So all this to say, to wrap up, in terms of investing in real estate or in the stock market, it all depends on someone's preference. Some people may just prefer real estate for the purpose of just wanting to have a house that they call theirs. But essentially, it's mostly for most people, they get into a mortgage, right? 25 years, that's almost a quarter of your lifetime if you're lucky enough to live up to 100 years. So that's a very big decision. So I like to run numbers. That's what I like about some clients who reach out to me to say, can you run the numbers, some scenarios to say if the interest rates, or maybe just taking a fixed interest rate, what could be the best way here to invest in stocks or real estate. So I would love to hear from you what you think about real estate or stock market investments. And if you haven't subscribed on my channel, please kindly do so if you like to follow some information on personal finance and investing. And I would like to hear from you. So kindly put your comments on your thoughts on whether investing in real estate or the stock market can yield better returns. Until next time, this is me checking out for now. Thanks again for watching and have a wonderful time. Happy investing.